What's up, traders, and welcome back to Explain the Charts. Today is October 23rd, 2025, and we are diving deep into USDJPY, which has been making some absolutely massive moves lately. We're going to break down the critical news driving this pair and then connect it directly to what we're seeing on the charts. First, let's talk about the fundamentals because they are screamingly bullish for this pair right now. The Japanese yen is showing significant weakness across the board. This is being fueled by news of a potential $90 billion stimulus package in Japan. Furthermore, the appointment of Sanae Takaichi as the new prime minister is a major factor, as she is viewed as a fiscal dove who will likely boost spending. This kind of fiscal expansion tends to weaken a currency, and the market is pricing that in aggressively. On the US dollar side, things are a bit more mixed, but still supportive. We have some fresh US-China trade friction, which is increasing demand for the dollar as a safe haven. However, traders are cautious ahead of the upcoming US CPI release, which could inject a lot of volatility. This fundamental backdrop of a weakening yen and a cautiously strong dollar is the primary driver behind the rally we've been witnessing. This is all underpinned by the long-standing monetary policy divergence, where the Bank of Japan remains dovish while the Federal Reserve is comparatively hawkish. This interest rate differential makes holding the dollar more attractive than the yen, creating persistent upward pressure on the pair. Now, let's pull up the daily chart for USDJPY to see how these fundamentals are reflected in the price action. As you can see, the pair has been in a powerful and sustained uptrend since finding a bottom back in September around the 146 level. We have seen a consistent pattern of higher highs and higher lows, which is the definition of a healthy bull market. The price consolidated for several weeks around the critical 149 to 150 resistance zone. This 150 level is a massive psychological barrier, and the market spent a lot of energy coiling below it. Then, starting around October 21st, we saw an explosive breakout to the upside. The price has sliced through 150 and 151 as if they weren't even there. Yesterday's candle on October 22nd closed very strong near its highs, indicating that bullish momentum was carrying over into the current session. This multi-day surge shows immense buying pressure and conviction from the bulls. The volume during this breakout has also been robust, adding validity to the move. The previous resistance around 150 should now be considered a key support level on any potential pullbacks. To understand the very latest price action, let's drill down to the 15-minute chart from the last full trading session on October 22nd. Here we can analyze the intraday character of the market. The day started with a push higher, breaking above the 151.75 level. We then saw a period of consolidation for several hours, building a base around the 151.65 area. This sideways action is healthy as it allows the market to digest gains before the next move. During the US session, buying pressure reemerged, launching the price towards the 152 level. The price found intraday support multiple times, indicating buyers were stepping in on any minor dips. The session concluded with the price holding very strong, right near its peak. This type of closing action suggests that the momentum has not yet faded and there is a high probability of follow-through buying. Traders will be watching the session high around 151.99 as the immediate level to break for continuation. Any dip back towards the 151.65 to 151.75 zone would be the first test of support for intraday traders. For some additional context, let's briefly look at an hourly chart from early October. Even though this data is older, it's useful to see how the market behaved around these major levels on its way up. You can clearly see here how the price struggled with resistance between 150 and 150.50 multiple times. It took several attempts before the eventual breakout occurred. This historical price action reinforces the importance of the 150 zone. Having served as such a strong ceiling before, we can expect it to act as a very solid floor now. This is a classic technical principle of resistance turning into support. Alright, let's bring it all together and recap what we're looking at. The fundamental picture is overwhelmingly bullish, driven by Japan's fiscal policy and the ongoing monetary policy divergence with the US. The technicals on the daily and intraday charts are in full alignment with this bullish narrative. We have a strong uptrend and a recent powerful breakout from a consolidation phase. Let's outline the critical price levels to watch. Immediate resistance is the recent high just below 152. Above that, the key targets mentioned in market analysis are 153.25 and then the major psychological level of 154. The ultimate near-term target for bulls appears to be the 155.00 handle. For support, the first minor level is the intraday zone around 151.65. A more significant support level lies at the 150.00 to 150.50 area, which was the breakout point and former resistance. Major trend support sits much lower, around the 148 level. So, what are the likely scenarios? The bullish scenario, which I would place at a 70% probability, sees the price continuing its ascent. A clean break above 152 would reinforce this, opening the door to test 153.25 and higher in the coming days and weeks. This would be confirmed by continued yen weakness and strong U.S. economic data, particularly the upcoming CPI report. The bearish scenario, with a 30% probability, would require a significant catalyst to reverse this momentum. This could be a surprise intervention from the Bank of Japan to strengthen the yen, or a much weaker than expected U.S. CPI print causing a dollar sell-off. The first warning sign for bulls would be a break below intraday support at 151.50. A move back below the 150 psychological level would signal a much more serious bearish reversal is underway. The key thing to watch for in the immediate future is any commentary from Japanese officials about the currency's rapid depreciation and, of course, all eyes will be on that crucial U.S. CPI data. That release will be the next major catalyst for this pair. Finally, a quick disclaimer. This analysis is for informational and educational purposes only and should not be considered financial advice. Trading involves risk, and you should always do your own research before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next video.